morning, folks. This is Anne Marie. Today is December the 9th, 2013, and this is a look at market movement with the SPY. I want to remind you of what it is that I have been talking about in the broad market. We've been looking at a very large pattern on the weekly chart. We have two shaded regions because the ideal symmetry in the chart is not quite right, and these harmonic patterns do have a little bit of flexibility in terms of the range of motion. But what we can see is that we are at the top of an initial butterfly formation. Right? So we're looking at that. Let's go into the daily, take a little bit of a closer look. I want to talk to you a little bit about what it is that I did speak about before I left on holiday. And we've got a couple of different things to look at right here. Here is the first. We have a measured move. Okay? And that measured move gave us 180, 182 as a first target. All right, inside of that measured move, we have another formation which is an ABCD pattern with an initial target of 182.06. We are also looking at target patterns associated with the pivot points. Let's expand those pivots. And you can see that R1, which is 181.76, is our target right there. Now on November the 29th, our high was 181.75, which is 1 point above resistance level 1. So look at the targets. Measured move 180, 182. ABCD pattern 182.06. Pivot point on the weekly pivots 181.76, and the very top range here for this first leg 182.92. So what are we seeing, folks? We are seeing the confluence of targets, 3 of them in a row, just the ones that I am seeing, folks, not the ones that are significantly out there. There are more of them. Let's take a really close look at what we might be looking at right now. Okay, so we might have a potential double topping event right here, and let's move this chart up just a bit. All right, close it in. Let's take a look at a couple of different things. All right, so here we are on December the 4th. Things really started moving down. We went sideways. Turns out it was just testing the 200. What do we know? We know if we lose the 50, very likely we come into the 200 if we lose that 50% level. And we certainly did not come back up to test that 50. Telegraphing from high, low, lower high, lower low, okay? Sideways pattern, gap up on the job numbers, and now we are sitting in this range, holding the weekly pivot, folks. No gaps this morning. So what are we looking at? A potential double top based on all of this formation, short term. Could be a little bit of a sideways action pattern. Now, let me show you one more thing. If you notice this little rectangle here, it is a measured move. For distance, I have replicated this formation so that we can look at it in terms of time. All right? And so what does that show us? Well, this chart is going to actively change up for us in just a bit, because I don't have the most recent numbers. For some reason, they are not populating. But we have legitimately until today to see what it is that this thing is going to do, if it is going to be symmetric both to time and price, which means it will either accelerate out of this range, and there we're going to see, look at this, folks, if it's a potential double top and the loss of 1, 2, 3, 4 different formation targets, it's going to be a failed rejection region. okay, on 4 different measures. If it's a failed rejection region on 4 different measures, it is going to accelerate like crazy out of here because of everybody seeing these things and piling in because they want to catch the top. All right, I have no idea whether that's going to be the case or not. I really do not. What I do know is the following. This formation is set to either reverse and come back down to the base or accelerate way out of the top here. What do we need to look for? The breach of 180, 180. It's as simple as that. The breach of 180, 180, we can stair step into 182.05, stair step again into 182.44, 182.92, and so on and so forth. This is easy. This is easy, just so long as you don't get in front of it. Let the charts do the direction pointing, and you just follow along. That's certainly what I'm going to do. I haven't looked at the charts in an entire week, folks. Not one single thing. It is what I do when I get away from the markets. It makes my brain sharper, and it's taken me 6 years to figure that out. So this is definitely what I want to share with you. We are at a decision zone. How long we stay in the zone is going to really be dependent on whether it is we can break out or down from the range. Here, it seems likely that there's a rollover formation. However, we are still showing positive divergence according to the SMIs. If we're showing positive divergence, guess what? Probably not going to roll over just yet. All right? Just pay attention to it. If you want to get aggressive, you can start the long above 180, 114. Other than that, pay attention. Pay attention and just do whatever the market is telling you to. All right? Good luck trading today.